Hello, and thank you for joining us today for the Federal Home Loan Bank of San Francisco's 2026 WISH Program webinar. In this presentation, we will be providing an overview of the 2026 WISH program. My name is Amparo Arzola, and I will be one of your presenters today. My colleagues Bianca Macias and Cindy Young will also be presenting. We would like to remind those who have joined us today that this webinar is intended only for bank members and representatives of community organizations. This event is not appropriate for homebuyers or the general public. This is our agenda for today. First, we'll provide an introduction to the Federal Home Loan Bank of San Francisco. Then, we'll give an overview of the WISH program. We'll then talk about the application and program participation. Next, we'll discuss income eligibility and enrollment. And in this segment, we'll walk through a case study together. After that, we'll discuss the funds reservation process and then loan closing. Then we'll move on to cover how a member can request a disbursement. And finally, we will conclude our webinar by sharing some helpful reminders. Introduction. The Federal Home Loan Bank system was chartered by Congress over 90 years ago during the Great Depression as a funding resource for home mortgage lenders. Today, lending institutions use federal home loan banks to help finance housing and economic development in their communities. There are 11 federal home loan banks nationwide, and each operates as a private cooperative financial institution. We are a government-sponsored enterprise, and we are regulated by the Federal Housing Finance Agency, the same regulator of Fannie Mae and Freddie Mac. The Federal Home Loan Bank of San Francisco is a cooperative and is owned by member institutions headquartered in our district of Arizona, California, and Nevada. That means our institutions are our shareholders and our customers. Our members include commercial banks, savings institutions, credit unions, insurance companies, as well as non-depository community development financial institutions, or CDFIs. While we are a privately held company, we do have a public service mission, and it's because of that public service mission that we provide a variety of products and services to help support and benefit our members and the communities that they serve. This graphic demonstrates the products and services we provide to our members, which include grant and credit programs. We offer support for affordable housing through the Affordable Housing Program, or AHP General Fund, and AHP Nevada Targeted Fund. We provide homeownership support through the AHP Set Aside Program, also known as WISH, and other discretionary programs, such as the Tribal Nations Program, Disaster Relief, and the Middle Income Down Payment Assistance Program. We also have AHEAD, our Economic Development Grant Program. And we provide outreach and program education, such as today's webinar, to help educate and benefit our members and the communities they serve. You can go to our website to learn more about our programs. We are required by our regulator to allocate 10% of the bank's earnings each year to fund the Affordable Housing Program. A percentage of the AHP allocation is then used to fund the WISH program. The WISH program is a matching grant program for homeownership, and the funds are used for down payment and closing cost assistance. The allocation for the WISH program is typically announced in late March of each year. Next, I'll give an overview of the WISH program. WISH stands for Workforce Initiative Subsidy for Homeownership. The WISH program provides matching grants to eligible first-time homebuyers. The match is a 4-to-1 match based on homebuyer contribution and can be up to the maximum FHFA subsidy limit which is $32,837 in 2026. For example, if a home buyer contributes $8,000, we can provide a matching grant up to $32,000. Please note, we strongly recommend members round the subsidy amount requested to $32,000 for operational simplicity. Homebuyer contribution can come from a few different sources. It may be household savings, which includes individual development account savings or family self-sufficiency savings. It can also include gift funds from individuals outside of the transaction or sweat equity in a self-help transaction, such as in a Habitat for Humanity sponsored purchase. Also keep in mind that other assistance program grants or credit concessions from a party of the transaction, such as a seller or a lender, are allowed in the transaction, but they are not considered homebuyer contribution. The homebuyer must be a first-time homebuyer per the bank's definition, which has been adopted from HUD's definition. This next bullet is very important. The WISH program does have an income restriction. It is restricted to households that are earning at or below 80% AMI or area median income. The homebuyer must also complete a home buying counseling program provided by an experienced organization. Finally, there is a 5-year retention period, and after 5 years, the WISH grant is fully forgiven. Next, I'll talk about the WISH application process. Each step of the WISH process, including application, enrollment, reservation, and disbursement, must be completed in the Community Investment Portal, which can be accessed through our website, FHLBSF.com. Here's a screenshot of our website. I'll quickly point out where you can find this information on the bank's website. When you come to our homepage, click on Products. And then in the Community Program Grants section, you can select WISH to come to the WISH program page, where you can find valuable WISH resources and access the Community Investment Portal. Now let's review how to request access to the Community Investment Portal. Our Community Investment Portal offers our member users a streamlined and efficient process for participating in the WISH program. Participating members can enroll homebuyers, submit funds reservation requests, initiate disbursement and repayment requests, and submit supporting information and documents online, and can see real-time status updates on their requests and communicate directly with the bank through the portal. Please note that we have a series of short video tutorials covering some of the key actions in the Community Investment Portal, accessible via the Help Resources tab. Now, to establish access to the Community Investment Portal, members can visit the Community Investment Portal page and follow the detailed access instructions to designate a Community Investment Portal Access Manager. All organizations must designate at least one access manager by submitting the Access Authorization Form via email to wishportal@fhlbsf.com. The access managers will be able to activate your institution's profile. Access managers will also be responsible for managing contacts within their organization and activating and removing access for their contacts in the portal. All other potential users should contact the designated access manager at their organization to request access to the portal. The How to Access the Community Investment Portal document, Access Authorization Form, and Portal User Agreement are available on our website. As a reminder, Members who have already established access to the portal do not need to submit a new access request. Next, let's review who can apply to the WISH program. Any member of the Federal Home Loan Bank of San Francisco that is in good standing may apply and participate. The member application period for the annual WISH program cycle starts in late March, and applications will be accepted on a rolling basis between March 16th, 2026 and March 12th, 2027 at 5 p.m. Pacific. As highlighted earlier, every step of the WISH process, including the program application, must be completed in the Community Investment Portal. The WISH application materials in the portal consists of 2 documents: the Annual Participation Form and the Direct Subsidy Agreement, DSA. The Annual Program Participation Form is a simple form that asks for basic information from our members. The Direct Subsidy Agreement, or DSA, is a legal contract between us, the Federal Home Loan Bank of San Francisco, and the member institution. This document was developed by our legal department, and we encourage our member institutions to have their legal department review this contract prior to signing and submitting to us. Most importantly, the Direct Subsidy Agreement must be signed by an authorized signer of the member institution on file with the bank. To enable the step-by-step guidance for completing the WISH program application, please click the Help Resources tab and search Participation and follow the on-screen prompts. One final reminder on the application process. A new Annual Participation Form and Subsidy Agreement, DSA, are required even for members who have participated in past program cycles. Now let's take a look at the timeline for our 2026 program year. At the time of this recording, the 2026 program has not opened yet. Typically, the program opens on or around March 31st each year. When the 2026 program year officially begins, the member institutions may apply to participate throughout the program cycle. The member application period will remain open until March 12th of the following year or 2027. Once approved, member participants may work to enroll eligible homebuyers into the WISH program throughout the program cycle. As you can see, our program cycle is 1 full year. For any homebuyers using the 2026 program funds, escrow must be opened no later than March 31st, 2027. If a homebuyer does not open escrow until March of 2027, we understand that they may not close on the transaction until April or May. This is allowable. As long as the homebuyer has opened escrow prior to March 31st deadline. We do expect that for all homebuyers using 2026 funds, escrow would be closed by July 31st, 2027. Next, let's move on to the disbursement process. Disbursement process. How does disbursement work? Well, there are 5 milestones from enrollment to reimbursement. The first step is enrollment. A participating member identifies a homebuyer and then determines a homebuyer's income eligibility when completing the enrollment step in the Community Investment Portal. Some of our member participants work with community partners to identify those homebuyers in their local communities. And we have no objection to this. But I do want to remind our members that it's the member that ultimately determines a homebuyer's eligibility and enrolls the household in the WISH program, not the nonprofit organization or the housing counseling partners. Next, after the enrolled homebuyer has identified a home to purchase and is in contract or escrow, the member reserves funds for each eligible household. At loan closing, the member will front the wish grant to the homebuyer in escrow. And only after escrow has closed will the member submit to us a disbursement request. The member will prepare a disbursement request by gathering all the required documentation after the household has closed escrow and completes the disbursement request process in the Community Investment Portal. The final step of this process is reimbursement. Upon receipt of a complete disbursement request from our participating member, the bank will validate and confirm all eligibility and conditions have been met, and then reimburse the member. We strive to reimburse our members within 45 days from the time we receive the disbursement request. However, depending on the volume of disbursement requests, it may take longer than 45 days. To reiterate, every step of the wish process, including application, enrollment, reservation, and disbursement, must be completed in the Community Investment Portal, which can be accessed through our website. Now that we have covered the wish process at a high level, we'll now focus on enrolling a homebuyer into the wish program. During the next part of the webinar, we're going to cover the income eligibility and enrollment step of the disbursement process. You as a member will be determining income eligibility when enrolling households for the WISH program. So today, we will review some of the essential information and documentation necessary to determine income eligibility. And we'll go through a case study together. Let's start by looking into income eligibility, a crucial aspect of the WISH program. Program and income eligibility must be determined at the time a homebuyer is enrolled for the WISH program in the Community Investment Portal. From the date a household enrolls into the WISH program, escrow must be opened within 1 year. For example, if a household enrolls on May 1st of 2026, escrow must be opened no later than April 30th of 2026. Please note that the enrollment period pertains to the escrow deadline and does not need to align with the 2026 WISH program year. Now let's take a closer look at the enrollment step. To submit an enrollment in the Community Investment Portal, the following is required: program year, homebuyer name, enrollment address, household income workbook, HUD AMI calculation. It's very important to confirm all homebuyer information prior to submitting the enrollment step in the portal, because household income and composition cannot be modified in the portal once household enrollment is submitted. Please note that we will review the household income workbook and HUD AMI calculation in greater detail shortly. Before moving on, I would like to review 2 helpful reminders about the enrollment address. The enrollment address listed in the Enrollment tab must be the address of residence of the homebuyer at the time of enrollment. Furthermore, each household member's enrollment address must be verified, including any children. Now let's continue our conversation on enrollments. Members who participated in our 2025 WISH program may transfer homebuyer enrollments to the new 2026 program year in order to reserve funds under the 2026 allocation. Members who participated in the 2025 WISH program cycle and who have active homebuyer enrollments can submit a one-time request to the bank to transfer any complete and active 2025 enrollments to the 2026 WISH program year. Please note, in order for the bank to transfer homebuyer enrollments, Members must be active participants in the 2026 WISH program year. Please submit any enrollment transfer requests by email to wishportal@fhlbsf.com. All enrollments must be in the submitted status prior to reaching out to the bank. Any incomplete enrollments, for example, enrollments in draft status, will not be transferred, and members will need to re-enroll the household in the 2026 program year. Next, we'll cover how to determine area median income, a critical component of the enrollment step. In the enrollment step, in the portal, the area median income, or AMI, must be calculated to complete the Household Income Workbook tab. Before completing the HIW, we must determine that the AMI set by HUD and compare it to the household's total income. This determination involves three key factors. First, we need to identify the location, specifically the MSA or Metropolitan Statistical Area that corresponds to the homebuyer's residential address at the time of enrollment. It's important to note that the address used at this point is not the property being purchased. You can determine the household's MSA using the FFIEC website linked here. The second factor is number of people in the household. Because income limits vary based on family size, we must know the number of people in the household at the time of enrollment. Finally, we need to make sure we use the correct year's income limits that are valid at the time of enrollment. Please note that HUD releases new income limits annually, but these updates do not follow a calendar year basis. For example, in 2025, the new income limits were not released until April 1st. And for the current year of 2026, at the time of this recording, the limits have not been released yet, but we're expecting those to come out this spring. It's important to keep in mind that the HUD AMI calculation and the household income workbook are now embedded into the enrollment process step. Now I'll hand it off to Bianca, who will cover the household income workbook and show how these tasks have been streamlined and integrated into the enrollment process step in the portal.
Thanks, Amparo. In this portion, we will review the process of confirming household income eligibility in a case study. We will demonstrate how to complete the household income workbook and submit enrollment in the community investment portal. In our case study, we're going to determine income eligibility for John Doe's household. In the interest of time, we've initiated a homebuyer enrollment profile under the head of household, John Doe, and entered his personal information. Then, on the Enrollment tab, we've entered in the enrollment address, which is the household's current residence address, not the purchase property address. And this address should be visible on one of the third-party income documents for validation purposes. Under Qualifying County, or MSA, we selected the county corresponding to the MSA of the address. It is important to validate your selection according to the FFIEC website, as this will impact the 100% HUD income limit used for the household income qualification. Now, we move on to the next tab, which is Household Income Workbook, or HIW. On the HIW tab, the first section you will see is Enrollment Date. This date here is auto-stamped and is the date you initiate the homebuyer enrollment. The enrollment date starts the clock for the 1-year period in which the homebuyer must open escrow for a home purchase. Before moving on, I'd like to point out a few helpful resources available here. If you're qualifying a household income for the first time or need a refresher, we recommend that you review these resources before starting your calculations. The first one is the Help Resources tab on the right side of the form. Here, you can locate the Household Income Workbook Guidelines. These guidelines are provided to help facilitate consistent income qualification practices by all program participants and ensure regulatory compliance with the Affordable Housing Program. This document highlights some of our essential program policies, including guidance on the sources of income to include or exclude in the income qualification calculation. You will also find a comprehensive list of acceptable verification documents necessary to validate household income from various sources and to verify household address and composition. For instance, individuals earning employment income must provide either a verification of employment form or 3 recent consecutive pay stubs. They must also provide the most recent complete federal income tax return with all schedules, W-2, and 1099 forms. All income documentation for a household must contain consistent information, including household member names and identification numbers. The Acceptable Verification of Income table can also be conveniently accessed on the HIW tab. Note also that there is additional guidance available in the instruction boxes and tooltips. We recommend that you review these helpful instructions and tooltips before filling out the workbook. Now, let's get started with completing the income for the Doe household. In the Household Members section, this is where we would list each member of the household and his or her respective personal and income information. As you can see, we have already entered the 4 household members and their basic information in advance. Before we begin our income calculation, remember that we require our members to perform at least 2 methods of income calculations for each source of income, and the highest calculated figure is automatically used as the home buyer's income from that source. Now, let's work on calculating income for the first member of the Doe household, John Doe, who receives employment income. In John's record, navigate to the Annual Income Earnings section, click the plus button to add an income source. In the pop-up window, select the corresponding income type, which is employment, and hit Initiate Calculation. First, we need to correctly identify how frequently the home buyer receives income. As reported on this pay stub here, John is paid on a biweekly basis. Next, we look at the different types of income received in this paycheck, especially taking note of any income aside from his regular pay. We can see here that John did receive overtime pay in addition to his regular pay. Unless we have verification otherwise, we're going to assume that these types of pay are a normal part of John's income, and we will include them in our calculation. Next, we identify his gross pay for the pay period, and we'll do that for all 3 of the pay stubs. The gross pay amounts identified will be used in our pay per pay period approach calculation. On John's most recent pay stub, we'll note the period end date and year-to-date gross income for our year-to-date approach income calculation. Let's go ahead and plug this information into the HIW. In the income documentation field, enter the documents we are using to verify this income source. Then, we will perform our first calculation in the year-to-date approach. For start date, we will use a default date of January 1st of the current year, unless we have verification otherwise. For any start date other than January 1st, we would require a verification of employment or the first pay stub of the current year as validation. For period end date, we will use the period end date as indicated on John's most recent pay stub. Be sure to enter the period end date, not the pay date. For year-to-date gross income, we will enter the gross pay amount indicated on his most recent pay stub. Now, we will enter the data for our second calculation method in the Income per Pay Period approach section. According to his pay stubs, John is paid on a biweekly basis, and so we will select biweekly under frequency of pay. We will then take the gross pay amounts from the 3 received pay stubs and enter them in their respective pay period fields. In the Annual Income Hourly Wage Approach section, we will select No to indicate that it is not applicable for John's income. If a verification of employment rather than pay stubs were submitted for John, then we would select Yes and enter the hourly rate, hours worked per week, and weeks worked per year information. But because we received pay stubs for John, we will keep our selection as No. The next section is the Annual Income Previous Year Income section. As stated in the instruction box, this is a required field if the home buyer earned employment income from this employer in the previous year. Based on his prior year's W-2 form, we can see that John did receive income last year from this employer, so we must complete the section and fill in the previous year's income as reported on the W-2 form. Remember to use the highest wages amount on the form. As we can see on John's W-2, Box 3 shows the highest wages amount. And so, we will enter this amount as his previous year's income on our online form. The final section is the explanation and comments box. This is your opportunity to further explain the details about your calculation or share any additional information that is not readily available in the supporting income documents. After completing all the information, hit Calculate, Confirm, and then the system will calculate all the respective income under each approach. The highest income amount is then used as John's annual employment income. Next, we will move on to Income Earning Asset section and report any applicable income generating asset. From John's recent saving account statement, we took the ending balance and annual percent yield and entered the figures as the current dollar value and interest rate of return. We click Calculate, and the system will calculate the annual income earned by this asset. As stated here in the instruction box, for any income earning asset of $50,000 or more, a recent account statement is required in the income document packet for validation purposes. Note that the threshold amount for this requirement is $50,000. If an asset has a cash value less than $50,000, supporting documentation is not typically required. After we have finished reporting in both the annual income earning and income earning assets section, we want to calculate his total income. To do that, we first check to confirm the status for each source of income listed here shows calculated to indicate that the calculation was fully completed. And then we will hit Calculate once again, and the system will calculate and generate the total annual income for John. With that, we have completed the income calculation for John. Now, let's move on to the second household member, Jane Doe, who receives both self-employment and Social Security income. We will start with calculating her self-employment income. For self-employment income, we require a profit and loss statement showing at least 3 months of earning and 2 years of federal income tax return. For the calculation of Jane's self-employment, we're going to reference Jane's profit and loss statement. Please note that not all deducted expenses are considered expenses under our program, and so any unqualified expenses such as depreciation must be added back to the net income. As you can see in Jane's statement, the only unqualified expense is depreciation, and so we'll note this amount for our calculation. Now, in the year-to-date approach section of the HIW, we will input the start and end dates as they appear on the profit and loss statement. For the year-to-date gross income, in the tooltip, we are reminded to enter the net income for self-employment income. Since we do have an unqualified expense of depreciation on the P&L, We will select Yes for the question, any unqualified expenses, and complete the depreciation field so that the amount is added back to the net income. For the second calculation method under the income per pay period approach, we will refer to the 2 previous years' federal income tax returns and determine the average yearly income. Again, we want to review the document and take note of any unqualified expenses. Here on Jane's Schedule C, we note that depreciation was deducted, and so it must be added back to the net income. In the income per pay period section of the online form, select Annual as pay frequency and enter the 2 years' net income along with any unqualified expenses. If there are any comments, enter them in the explanation and comment box. After we are done entering the comments, we will hit Calculate, and the system will automatically calculate the respective annual income under each calculation approach. As you can see, the highest amount is applied as Jane's annual income from self-employment. As mentioned earlier, aside from self-employment, Jane also receives Social Security income. So we will need to report this as income. For her Social Security income, we received an award benefit letter from the Social Security Administration. According to this document, she receives $2,600 every month. Please know that fixed income like Social Security is an exception to our requirement of 2 calculations. Because there is no variation in this type of income, we do not require a second calculation. Now, we click Calculate, and the system will generate her annual Social Security income. As reflected here in the annual income earnings section, both income sources have been calculated. We can now click the Calculate button once again to sum up the 2 income amounts. We projected $36,700 as Jane's total annual income. This completes our income calculation for Jane. Next, we will move on to calculate income for the remaining household members. The third member of the household, Jill Doe, does not earn any income. Since Jill is 18 years and older, we must also verify her income. For Jill, we received a signed no income affidavit. As you can see, Jill certified that she does not earn any income from a variety of income sources. It is signed and dated within a reasonable time from the enrollment date, so this verification for her income, or no income, is acceptable. On the HIW, you can see that we have pre-filled Jill's personal data and added her to the household. After that, we selected zero income as income source and entered no income affidavit as the income documentation. We will now click Calculate and confirm. Because Jill does not have any income earning asset to report, we will hit Calculate again to finalize Jill's total annual income of 0. Finally, the last member of the household needs to be included. Jacob is under the age of 18 and doesn't earn any income. However, it is still required to include him in the HIW table in order to get the correct household member count. As you can see, we have pre-filled Jacob's information, and the portal does not require an income calculation since Jacob is a minor. Once Jacob is successfully added, you will see the status stays at household member added in the table because no income calculation was conducted. Now, we have come to the final portion of the household income calculation, and that is to calculate the household income as a percent of HUD AMI. First, confirm the household size correctly reflects the number of members in the household. Double-check that the status of all household members 18 or over is at Calculated to confirm the income calculations were fully completed. Then, click on Calculate AMI, and the system will calculate the household income as a percentage of AMI. As you can see, the Doe household income is at 71.24% of AMI. Since this percentage is less than the 80% income threshold limit, we can confirm the household is indeed income qualified for the WISH program. In the attestation section, we can check Yes to confirm the household meets our program's income requirement. Now that we have confirmed the household's income eligibility, we can hit Submit Enrollment to finalize the enrollment of the household into the WISH program. Once we receive this confirmation, the household is officially income qualified and enrolled into the WISH program. This completes our case study. Now, I'll hand it over to Cindy to cover the funds reservation process.
Thanks, Bianca. Now, let's talk about the funds reservation process. Which funds are reserved on a first-come, first-served basis until the program allocation is fully exhausted. Only participating member institutions may reserve WISH funds for an eligible homebuyer. Members may only reserve funds for enrolled homebuyers who are in contract for a home purchase with loan closing scheduled within 60 days. A member can request funds via the Community Investment Portal. Simply select the Reserve Funds for Homebuyer step to get started. When reserving funds in the Community Investment Portal, members must enter the 5 items listed here. 1. The requested grant amount, which now has a new maximum of $32,837 per household. We strongly recommend that our members submit or round out the subsidy amount to $32,000. 2. The purchase property address. 3. The scheduled loan closing date. 4. The escrow company or settlement agent. And 5. The escrow number. Once the member submits the reservation request, they will receive an automated email confirming the funds reservation. The funds reservation is valid for 60 days from the date of reservation. Members must update their funds reservation as necessary, specifically when homebuyer escrow is canceled or delayed. To cancel a reservation, members can handle the cancellation directly in the Community Investment Portal. For funds reservation extension or scheduled loan closing date or reservation amount changes, email our WISH portal mailbox for assistance. Notification to the bank is required if the scheduled loan closing date changes significantly or if it is beyond the funds reservation expiration date. Now, let's look at what happens at loan closing. As we mentioned earlier, the homebuyer must complete Homebuyer Counseling in order to receive a WISH grant, and that homebuying counseling session must be done prior to loan closing. The Homebuyer Counseling program should be offered by an experienced organization that adopts the national industry standards for home ownership education and counseling. A valid copy of the certificate of completion must be submitted in the disbursement request package. Next, we will review the retention mechanism required for the WISH grant. All households that receive a WISH grant are subject to a 5-year retention period. For this reason, we required our members to submit 3 retention documents: the AHP promissory note, deed of trust, and the AHP rider to deed of trust.
Our bank provides templates for the AHP promissory note and AHP rider to deed of trust. Members may access these templates in the Community Investment Portal. After the funds reservation step is completed for a home buyer, members have the option to download and print a pre-populated note or rider to deed of trust with the home buyer name, property address, and grant amount. We encourage members to use the pre-populated retention templates to minimize any potential clerical errors. However, non-pre-populated templates are available on the Help Resources tab. For the deed of trust, members are required to provide their own version. The wish grant may be in any lien position, second, third, fourth, and so on. A reminder that the member is the lender on the promissory note and the beneficiary on the deed of trust. I would like to highlight another retention document template that our bank provides to support Native American home ownership, and that is the Wish Promissory Note and Retention Agreement for Tribal Land. This document does not require recording with the Bureau of Indian Affairs. Members can access this template under Help Resources tab in the Community Investment Portal. Now that we have covered retention documents, let's review our retention requirements. We will continue covering disbursement requests after our review of repayment notice notification requirements. As mentioned earlier, the WISH program requires a 5-year retention period after a household receives a WISH grant. In the event of a sale, refinance, or foreclosure, etc., of the WISH-assisted property, notification from our member is absolutely required. While the notification is required, a repayment may or may not be necessary. We perform a 2-method calculation, and the lesser of the pro rata calculation versus the net proceeds calculation will determine the final repayment due. For this reason, we recommend the homebuyer retain any documentation concerning any principal paid on any senior mortgage, household investments, or any capital improvements they have made to their home. Remember that we require our members to submit notification 10 business days before any scheduled loan closing. Members can submit these notifications via the Initiate Repayment step in the Community Investment Portal. There are a few scenarios when repayment is not required. 1, if the WISH-assisted home is resold to another income-eligible home buyer, then no repayment is required. There are 2 ways to verify that the new home buyer or the new purchaser is income eligible. The first, the member may use a homebuyer income proxy method. You can visit HUD's website and look up the Home Housing Trust Fund home ownership value limits. If the new sales price of that WISH-assisted home is less or equal to the value limit, the new purchaser is then regarded as income eligible, and no repayment is due. Or the member may also provide us with a new purchaser's income documentation to validate their low income eligibility. The second scenario, if the WISH lien is subordinated as part of a refinance, then no repayment is required. The third scenario, in the event of either a sale or a refinance, If the repayment amount is going to be $2,500 or less, then no repayment is due. The member must conduct the pro rata and net proceed calculations in the Community Investment Portal to determine whether that amount is more or less than $2,500. Lastly, in the event of a foreclosure or deed in lieu of foreclosure or assignment of the FHA first mortgage back to HUD or the death of a homeowner of the wish-assisted home, then no repayment is required. Keep in mind that members must notify the bank of these qualifying events by submitting a repayment notification in the Community Investment Portal, even if repayment is not required. Next, I will review a case study to demonstrate how easy it is to submit a repayment notification for the sale of a wish-assisted home. In this case study, we have a wish-assisted home buyer, Larry Doe, who is selling his home in the Phoenix area in Arizona. A member can look up the HUD value limit on HUD's website. Be sure to use the limits that are currently in effect. As you can see, HUD published these fiscal 2025 limits on December 1st, 2025. And until HUD publishes new value limits for 2026, we will keep using the 2025 limits. We want to look up the limits for the county and MSA in which the property is located. In this case, the city of Phoenix is located in Maricopa County, and the corresponding limit is $399,000. The estimated closing disclosure shows that the new sale price is $380,000, which is less than the sale price limit of $399,000. For this reason, under the home income proxy, the new purchaser is considered low or moderate income, and therefore no repayment is due. The member can then select the event type and complete the repayment notification. Now let's see what this looks like in the Community Investment Portal. As you can see, the portal requires the member to enter the event type, sales price, and the anticipated date of event. The portal will auto-calculate the pro rata calculation and prompt user to answer these questions. Is the subsequent purchaser a person and not an organization? Which method to determine subsequent purchaser's income eligibility? HUD Home and Housing Trust Fund home ownership value limits. And the direct link is provided as well. Once the process has been completed, the portal will automatically calculate and inform the user whether there is an amount that needs to be repaid. We will now continue with the topic of loan closing documentation, specifically the closing disclosure form. We require a copy of the final closing disclosure, and it must be signed by the home buyer. If the closing disclosure is missing critical details about the wish grant, we will also require the final settlement statement prepared by a title or escrow company to accompany the closing disclosure. Please ensure to submit the final version of the closing disclosure. If the final settlement statement is also provided, the closing disclosure should match or very closely mirror the items on the final settlement statement. There are a a few key items that we look for on this form. The homebuyer's contribution amount must be at least 1/4 of the subsidy requested. The closing costs should be customary and reasonable. Reminder that WISH is a down payment assistance program for low-income buyers, and our goal is to support affordable and sustainable home ownership. Any fees in the transaction that are higher than typical, such as realtor fees, should be addressed prior to finalizing the closing disclosure and submitting a disbursement request to the bank. The total WISH grant and amount must be clearly identifiable. And there should be no more than $250 in cash back to the homebuyer. This is a regulatory requirement, and we cannot provide exceptions or allow any amount over $250 in cashback. Any excess cashback can be returned as a principal reduction payment to the mortgage lender. Let's take a look at a sample closing disclosure form. I'll go straight to page 2 to point out a few things. Page 2, line A shows the origination charges. We look here to determine if the transaction closing costs are reasonable. Next, on the third page, section L, line 1 and 2 show deposits of $7,000 and $3,000 from the home buyer, which verifies the home buyer's contribution. On line 6, we see the home buyer received a grant of $20,000 from the city of Phoenix. And on line 7, the WISH grant of $32,000. As stated earlier, the WISH grant only matches the home buyer's contribution, so the city of Phoenix grant amount could not be considered home buyer contribution, and the WISH grant would not match it. The WISH grant could be recorded in third lien position for this transaction behind the first mortgage and the city of Phoenix grant. Finally, at the bottom of the page, you will see the line cash to close from borrower. If the borrower did bring in more funds at closing, this amount would count towards the homebuyer contribution. Note that any amount over $250 in cash to close to borrower is prohibited, even if the homebuyer brings in more than the minimum required homebuyer contribution, which is more than enough to make the 4-to-1 match ratio. We still do not allow more than $250 in cashback. However, we do allow a principal paydown of the first mortgage if there is excess cash at closing. Under AHB regulations, the excess funds cannot go back to the homebuyer in cash, but you can apply the funds toward a principal paydown. In this example, you can see on line K5, there was $1,000 in excess cash at loan closing that was applied to the transaction as a principal reduction, rather than any amount in cash to close to borrower. Now, let's talk about requesting a WISH disbursement. After each household closes escrow, the member institution must submit to us a complete disbursement request. There are important timelines to keep in mind as the member prepares a disbursement request. We must receive a disbursement request within 2 months of the home buyer's loan closing. If there is any deficiency or issue with the documentation, it must be cured within 4 months from the time we receive the disbursement request. Let's look at an example of that timeline. If the home buyer closes on a home purchase on June 1st, then the member institution must submit a disbursement request to us within 2 months, which would be no later than July 31st. Then, the member has until November 30th, or a 4-month period, to cure any deficiencies. Altogether, this is a maximum 6-month timeframe between when the member fronts the grant funds at loan closing to the time of reimbursement. It's important to note this timeline is a direct recommendation from our regulator. If the member does not comply with the time limits, we reserve the right to decline the disbursement request, and the member institution may not be reimbursed. Also, keep in mind, we recommend submitting disbursement requests as early as possible to help ensure a smooth submission and timely reimbursements. Furthermore, we suggest submitting disbursement requests gradually as loans close, using a drip approach instead of waiting to submit a large batch in one day. This method can help us process your requests more efficiently. Now, let's review how to request a disbursement. For the disbursement request, the member institution will submit to us a packet of documents, and the documents are all listed here on the slide. We've covered a few of the required forms listed here already in our previous segments. So now I will go through the remaining forms in the next few slides. There are a couple of points we want to mention about document submission. Members must submit program documents electronically via the bank's community investment portal. It is critical to redact all personal identifying information, or PII, on any documents submitted to the bank. Members must redact the first 5 digits of any visible PII. For verification purposes, please ensure to redact only the first 5 digits and leave the last 4 digits of any Social Security numbers and bank account numbers visible. Please ensure to upload a single file to each folder. Members may need to combine multiple documents into one PDF file. For example, all paid stubs, tax forms, etc. should be uploaded as one file under the Proof of Income folder. After all documents have been uploaded by the member contact, certification is required. Members must certify that each disbursement request meets all program requirements. The certification must be completed electronically by an authorized signer of the member institution via the Community Investment Portal. To prevent any delays, we recommend member contacts and authorized signers keep each other updated on any pending records. New this year, eligible wish home buyers who have been unable to obtain a FHA mortgage loan due to wish program requirements are eligible to apply for the bank's Middle Income Down Payment Assistance Program. We want to stress that the FHA borrowers who are able to use the WISH program must use the WISH program. Only those who are unable to obtain an FHA loan with WISH program are eligible to apply for MDPA. As part of the MDPA disbursement requirement, the final closing disclosure must verify the loan type as FHA and must be accompanied by documentation such as an adverse action notice verifying the home buyer was previously denied an FHA mortgage loan due to WISH program requirements. All other MDPA program requirements remain in place. We have now come to the final segment of the presentation, and let's talk about a few helpful reminders. First up, funds reservation is on a first-come, first-served basis. Each reservation is valid for 60 days. I want to emphasize again that households must be income qualified, enrolled, and in contract before the member moves on to the funds reservation step. The disbursement request must be received by us within 2 months after a loan closing. We encourage our members to send us a disbursement request as soon as they can, within a couple weeks or even days after a loan closing. Remember, the sooner the disbursement request is submitted, the sooner we can review and the sooner we can reimburse the member. A reminder that all household members listed on the HIW must be validated. Information including the household member names, identification numbers, etc., must be consistent across all documentation. Generally, dependents and other household members reported on the head of household's income tax return can be validated using the tax return. However, if household members are not listed on the federal tax return, we will require separate third-party validation for each member of the household, including any children or dependents. Income qualification must be performed for all adult household members who are aged 18 or over per our program guidelines. As a reminder, you can access this resource on the Community Investment Portal. Income eligibility is based on the address of the household at the time of enrollment, not the purchase property address. Also, we want to remind our members to always use 2 methods to calculate income projections. And for employment income, the prior year's W-2 gross earnings must also be considered. It's also important to review prior year's tax return and reconcile any discrepancies on the income document. The income on the W-2 that is submitted to us must match the income that is stated on the tax return. Again, members should always ensure consistency across all documentation submitted in a disbursement package. This includes household member names, identification numbers, and etc. HTI, or housing expense to income ratio. Whenever the HTI ratio is over our benchmark of 35%, a satisfactory explanation as to how the mortgage is affordable is required. We want to ensure that the mortgage is affordable and home ownership is sustainable to the home buyer. A satisfactory explanation is different for each home buyer transaction. Past satisfactory explanations include additional savings or reserves, little to no debt outside of the mortgage, or the presence of other household income source that was not included in the mortgage loan qualification process. Cashback. Remember, per AHB regulation, cashback to the home buyer must not exceed $250. This includes any consumer debt payoff. And if any consumer debt payoff is evident, there must be enough additional cash in the transaction to cover both the consumer debt payoff and the minimum required home buyer contribution for the wish grant. Reminder that any excess funds should be applied to the transaction in the form of a principal reduction. Sweat equity, which is usually in a self-help transaction, such as a home buyer that is sponsored by Habitat for Humanity, is currently valued at $20 per hour. Please note that for these transactions, we require the sweat equity log or certificate of completion to be submitted. Retention documents. Reminder that the member must provide their own deed of trust. And we do provide a pre-populated template for the promissory note and the rider of deed of trust. The member is the lien holder on the deed of trust and promissory note. And if the repayment amount in the event of a sale or refinance within the 5-year retention period is $2,500 or less, then no repayment is required. Members can easily track statuses, review pending actions, and keep things moving with the View All Homebuyers feature in the Community Investment Portal. Simply click the In Progress tab. You can view the stage and status of all wished requests you are working on. As you can see here, this member has a disbursement pending authorization and another pending revisions. Tutorial videos are available to provide additional guidance on the key processes, and they are available on the portal's Help and Resource tab. Watch video tutorials on how to enroll a home buyer, how to reserve funds, and how to initiate disbursement. Members can also enable online or on-screen guidance for step-by-step guidance on any processes in the system, from enrollment to reservation and disbursement to repayment. This concludes our presentation. Thank you.